You've heard the stories about the market, and today's video is about what is happening in the Twin Cities real estate market as of the end of March in 2021. Hi, I'm Schumann. I'm a realtor here in the Twin Cities, and my video mission is to help people understand the real estate market here, whether it's about various neighborhoods or a look at the numbers. If you have questions, you can leave a comment down below or get my contact information out of the description box. If you are on a mobile device, you can find that description box by tapping the title of the video. The description box will pop open for you and my information is down there. My last video about this was pretty well received, so it seems like there is kind of a demand for this kind of information out there. And even though numbers aren't flashy, I'm going to try to make this a monthly feature as we navigate through this crazy market. This video has some golden nuggets, also known as good news, at the end if you're in a certain segment as a buyer in this market. So stick with me. Last time I posted a video, I talked a lot about absorption rates, and that's going to be a recurring theme on my video updates. So if you want to check that out, you can watch that video here. It's a little bit more detailed, but essentially what absorption rates are is the amount of time it would take for buyers to absorb every home actively for sale on the market if no other homes were added. So we consider the market balanced, like not favoring a buyer or a seller in any particular way, if there is 6 months worth of inventory. Anything less than 6 months of inventory is considered a seller's market, and anything higher than that is considered a buyer's market. So keep that in mind as we look at the data this week. I'm going to get to that a little bit further in here. There's an obvious lag in the data because we need to look at the data after homes have closed, and that all shows up in the MLS. But I do get relatively quick data from a company called Minnesota Transaction Coordinators. They help a lot of us with processing our transactions. So let's start there with their analysis of terms that they're seeing in contracts. The first term is inspections. In the past couple of months, we've seen quite a few buyers deciding to waive inspection in order to release one more contingency ahead of everyone else. And by a lot, I mean 38% of buyers were waiving inspection in the first 2.5 weeks of this month. But when they looked at data from the 1st through the 26th, that rate went to 31%. That means that enough people stopped waiving them to lower this percentage by 7%. Buyers are insisting on protecting themselves and sellers are acquiescing to that. So I don't know the sample size for this, but this is a good sign for buyers. Second term is offer acceptance rates. So even better, the offer acceptance rate has gone from 31% for the month last week to 39% for the month as of the 26th. So yay. Sellers are accepting offers. I represent a lot of buyers and it has just been tough. So this is really great news. All right, homes listed on the open market versus being withheld and sold in the private listing network. In an office as large as mine, we often hold listings off market and only market to agents within the office. This shrinks the pool of who looks at the house, which is desirable for a lot of reasons, from COVID to privacy, or simply not wanting to have to deal with the preparation and hassle of selling on the open market. Sellers can name their terms, and if another agent has a buyer that can meet those terms, there's a happy meeting of the minds without all of the associated prep work, exposure, etc., and everyone feels satisfied. The number of sales that they've worked on in this status is down to 5.6%. This is good because more homes are now hitting the market than have been in the past, so there's more inventory available for buyers. Percentage of list price received. Current purchase price to list price ratio is down to 104% from 105% last week. It's been hovering between 103 and 105% in the past couple of months. It's good to have that number in mind, even though it's not a fixed ratio. It's an idea that you should think about when you're offering on a property that has a lot of interest. Price is not the entirety of an offer. There are a lot of other terms that need to be in line as well, but this is good info for this particular metric. Seller paid closing costs. 26% of the deals that they saw come across their desk included some seller paid closing costs. I have to assume in this market that the offer price was increased to account for these, but I like that we're seeing that because it means that sellers are accepting those terms. Forms of financing. So the percentage of loans that are conventional, and you do not need 20% down for a conventional loan, but these are viewed as more favorable, and if you can get a conventional loan, it's one more little check mark on the list of terms that sellers are looking at and their agents are looking at. 76% of the loans fell into this conventional bucket. FHA loans represented 10% of the accepted offers, cash was 10%, and VA and USDA loans are at about 4%. Traditionally, inventory really increases around this time of year. Inventory is the number of homes listed available for sale, and we currently have less than half of the listings that we had 6 months ago. Okay, this is a table showing what the entire metro area looks like as far as available homes that are active and available to be looked at versus what's sold. You can see the trend over time, and we're down to 3,200 available homes in the metro area, with more than that sold in the last 30 days, and the absorption rate, this number 0.78, represents about 3/4 of a month's supply, so about 3 weeks of available inventory. Okay, this table shows you Hennepin County, which is Minneapolis and some of the first-ring suburbs. The relevant thing about this is that it's breaking it down by price point, and you can see on this table, I'm going to let you look at this for a second, that the high-end price points over $1 million is closer to a buyer's market. And as you go down in price, when you hit the $300,000 to $500,000 range, you're really only at 2 weeks worth of inventory. So, and you can see how this trend has gone over time. Good news for downtown condo buyers. Downtown condos are in a balanced market right now. If you're looking for a condo in the central city, including neighborhoods like Loring Park, downtown, University, Elliott Park, Dinkytown, etc., now is the time. We believe that this is caused by the pandemic and people wanting to live in less dense housing, plus fewer people needing to be downtown for work. But don't expect this to last. The speedy rollout of the vaccine and life returning to somewhat normal is probably going to change that market as well. Days on the market are up to 41 from only 38, but these are the kinds of indicators that let buyers know that they will not likely have to pay more than list price, that sellers will be willing to negotiate because they know that you can find another condo. Thanks so much for watching my video today. If you have questions, I would love to hear from you, so you can drop a comment down below. Go ahead and email me. Let me know how I can help you.